Recently, investors are speculating on some burning issues such as a tapering the Fed's balance sheet, the timeline for rate hikes, monetary tightening, and the hawkish rhetoric. By and large, the Fed's policy decisions came in line with the market expectations, but the policy meeting served as a powerful market catalyst. Now let's discuss what sentiment is dominating American markets and what macroeconomic data was released today. Following the upbeat GDP data yesterday, the US stock market capped on its decline, so the major stock indexes closed in the red. The Dow Jones closed with a 0.1% downtick, the Nasdaq shed 1.5%. Interestingly, the US stock indexes gained nearly 1% in the early American session. However, later on after the GDP report, the market again came under selling pressure. Today, futures on the S&P500 opened 0.6% up, having regained yesterday's lows of 0.5%. Now the index is trading lower at about 4,320 points. Traders are keeping close tabs on corporate reports of top American companies. Apple stands out among the rest. In response, Apple's shares surged by 4% yesterday. Besides, traders found out their first estimate of the US GDP for the fourth quarter. The economic growth was unexpectedly strong at an annual rate of 6.9%. Perhaps the Albeit GDP assured investors to sell shares. Indeed, the Fed Reserve has favored arguments in favor of generous fiscal support. Thus, the struggle with the soaring inflation is high on the Fed's agenda. It means that the regulator has no increased interest rates. The market got to know a batch of macroeconomic data from the United States. Personal spending declined by 0.6% in December. The core PCE released today leapt by 4.9% annually, the fastest growth since September 1983. The index is slightly higher than the expected 4.8% increase. The data cements the likelihood that the Fed Reserve will announce the first rate hike in March, and we will see how traders responded to this data. The US dollar found support from hawkish comments of Jerome Powell as he admitted faster tapering of the balance sheet and more rate hikes this year than initially planned. After the rate-setting committee unveiled the decisions on Wednesday, the US dollar has been advancing across the board. Its index has gained over 1.65% in the last 4 days, having climbed to the highest levels of 2020. Currently, the greenback is asserting strength, trading now at 97.38. The US dollar maintains a strong bullish momentum heading for new highs. The greenback is holding the upper hand over its Canadian rival. At the same time, crude oil is printing multi-year highs, now trading at $90 a barrel. It means that the USD CAD pair is set to move lower in the near future. Meanwhile, the currency pair is still rising, trading at about 1.2785. It's expected to stick to the upper border of the corridor between 1.2680 and 1.2800. Bitcoin has been trapped inside a tight trading range for a few days. The flagship cryptocurrency is hovering around $36,000. Albeit all altcoins slumped in the last 7 days, Bitcoin has incurred the least loss of 6%. For example, Ethereum has plummeted by almost 20% for the same period. Crypto analysts reckon that Bitcoin is regaining its status of the most valuable digital token. All in all, Bitcoin has grown by more than 4% in the recent 8 weeks. It's likely to hold in the corridor between $33,580 and $37,520. Experts share the viewpoint that the US stock market is ready for a new bullish wave. Let's see if this prediction comes true. Feel free to leave your comments and ask questions. Have a nice weekend and see you on Monday.